Titled A Great Stock Tax Debate, Will Korea's Markets Soar or Stumble? Hello everyone, and welcome to a crucial discussion rippling through South Korea's financial landscape. We're diving deep into the recent controversy surrounding stock capital gains tax, specifically the presidential office's stance and the fiery debate it has ignited. This isn't just about taxes, it's about the very future of our stock market, investor sentiment, and economic growth. As of August 5, 2025, the presidential office has made its position clear, yet nuanced, regarding the contentious issue of lowering the large shareholder threshold for capital gains tax. For those unfamiliar, this threshold determines who pays capital gains tax on stock sales. The government proposed lowering it from 5 billion won to 1 billion won, a move that has sent shockwaves through the investment community. Let's break down the presidential office's stance. First, they unequivocally stated that there has been no request from their side of the ruling party to re-examine the proposed reduction of the large shareholder criterion from 5 billion won to 1 billion won. This is a significant point, refuting assumptions of a softened position. Secondly, and perhaps more importantly, the presidential office emphasized its readiness to listen to diverse opinions. They underlined that they are prepared to fully consider and respect the views put forth by the ruling party once those opinions are consolidated. This suggests an open-door policy for dialogue, indicating that while they haven't initiated a re-evaluation, they are not entirely closed off to further discussions based on political consensus. Thirdly, a fundamental principle highlighted by the presidential office is the difficulty of altering policy based on short-term stock market fluctuations. They articulated that changing the very structure of the stock market, purely in response to temporary price volatility, is challenging. This perspective underscores a long-term vision, implying the policy aims to strengthen the fundamental underpinnings of the Korean stock market, rather than reacting to immediate market sentiments. However, they also noted that they are pursuing measures to enhance the long-term fundamentals of the Korean stock market, signaling a commitment to broader market stability and growth. And finally, the presidential office stressed its principle of fully considering the ruling party's opinions throughout various legislative and policymaking processes. They reiterated that if the ruling party prepares a proposal, they will be prepared to listen carefully. This reaffirms the collaborative dynamic between the executive and legislative branches, suggesting that room for political negotiation and adaptation remains. Now, let's delve into the background of this heated debate. The controversy stems from the government's announcement of a tax reform plan to strengthen the large shareholder criterion for imposing stock capital gains tax. This move, which lowers the threshold from the current 5 billion won to 1 billion won, was explained as a measure to correct the tax system eased by the Yoon Suk-yeol administration and to achieve tax normalization. In essence, it's about ensuring more individuals pay their fair share of capital gains tax. However, the announcement was met with significant backlash. Following the disclosure of the tax reform plan, the stock market experienced a sharp decline, and individual investors reacted with strong opposition. The discontent was so widespread that over 120,000 people signed a petition on the National Assembly's electronic petition website, demanding a reversal of the legal amendment. This level of public outcry is a clear indicator of the profound impact this policy could have on a large segment of the investing population. Adding to the complexity, even within the ruling party, there have been voices of concern regarding the strengthening of the large shareholder criterion. Some lawmakers pointed out that it could hinder efforts to boost the stock market and dampen investment sentiment. This internal dissent within the ruling party highlights the political sensitivity of the issue. Interestingly, Chung Chung-rae, a Democratic Party leader, requested that party members refrain from making public statements as opinions within the party were divided, showcasing the internal struggle to find a unified stance. So, what are the key points of contention, the chenchem or points of dispute? First, There's a heated argument about the causal relationship between the tax reform plan and the subsequent stock price decline, while the presidential office maintains that the stock price drop is not solely attributable to the tax reform plan. Some argue that it undeniably contributed to a weakening of investor sentiment. Did the market fall because of global factors, or was this tax announcement the final straw? The perception of cause and effect is crucial for public trust. Second, the fairness of the taxation itself is being questioned. Is strengthening the large shareholder criterion truly equitable? When compared to the average price of an apartment in Seoul, some argue that designating 1 billion won as the criterion for a large shareholder might be inappropriate. This raises a fundamental question: at what point does an individual investor become a large investor? In the eyes of the tax system, especially considering the significant assets many Koreans hold, not just in stocks, but in real estate. Third, there are concerns about the potential impact on long-term investment. With the current system, many investors tend to sell off their stocks at the end of the year to avoid capital gains tax, only to buy them back in the new year. If the threshold is lowered, this year-end selling phenomenon could intensify, potentially hindering the development of a long-term investment culture. How can we encourage patient, strategic investment if the tax system inadvertently promotes short-term maneuvers? Looking ahead, what can we expect? The ruling Democratic Party is expected to consolidate its internal opinions on the stock capital gains tax controversy. This internal alignment will be critical in shaping the legislative landscape. Subsequently, the presidential office is anticipated to engage in discussions and negotiations with the ruling party to determine the final policy direction. This collaborative approach suggests that while the initial proposal might be firm, there's always room for adjustment, based on political realities and public feedback. Indeed, given the strong public backlash and the concerns raised within the ruling party, there's a possibility of policy changes. This could involve partially adjusting the large shareholder criterion, perhaps setting it at a figure between 1 billion and 5 billion. Or implementing other supplementary measures to mitigate the negative impacts. The government might seek to find a middle ground that balances tax normalization with market stability. It's also worth noting some additional context. The 2025 tax reform bill encompasses various tax changes beyond stock capital gains tax, including an increase in corporate tax rates and adjustments to securities transaction tax rates. This indicates a broader governmental effort to reshape the overall tax structure. Furthermore, for reference, many European countries universally impose taxes on capital gains from stocks without setting specific large shareholder criteria. This international comparison often fuels the debate, with proponents of the tax arguing for alignment with global norms, and opponents emphasizing Korea's unique market conditions. So, what are your thoughts? Will this policy truly lead to tax normalization and a healthier market, or will it stifle investment and economic growth? Can we truly foster a long-term investment culture, while navigating the complexities of capital gains taxation? And where should the line be drawn between equitable taxation and fostering a vibrant, accessible stock market for all citizens? These are not easy questions, and their answers will undoubtedly shape the financial future of South Korea. Let's continue to watch this space closely and demand thoughtful, balanced policies that serve the best interests of our nation.